Thanks, Sunir. Thanks to the board and the chairs, and thanks for putting this all on. This is great. This is my first SaaS Connect, but I've been working with Sunir for about a year, just informally chatting. We're in this ecosystem, and so it's great to learn a little bit more about channel partnerships and stuff, so we'll talk about that in a second. My name's Rob. I'm with SaaS Capital. SaaS Capital is an alternative capital provider to B2B SaaS companies. We lend $2 to $12 million to companies with about 3 million of ARR and up. We've worked with 60 companies directly, and we've talked to thousands more over the course of our history. And because we're in this space, we're in the B2B space, SaaS companies only, that niche, we really want to focus and make sure that we're on top of trends and metrics and benchmarking data. So a number of years ago, we started doing a survey out to our database, and we just completed our 8th annual survey, and we had over, I think it was actually 1,100 companies, but at least 1,000 companies respond this year. And for the first time, it's all on just performance benchmarking data, things like revenue, growth rate, retention rates, things like that. And for the first time last year, we'd been getting a lot of questions in this space on channel partnerships. Our portfolio companies and people we've spoken with were all curious, should I start one? How should I do it? Who should I partner with? Is it worth it? And we didn't know anything about it. So we started asking questions in the survey on it, just to learn a little bit and get a little more data ourselves. And so this was our second year. We run it in Q1 of each year, and it's on the previous year's performance. So this is all 2018 data, and we just closed it, hot off the press. And like I said, Sunir and I had been talking, and it seemed like it made a good sense to kick things off today with a little data on what the state of the market is, what the state of the channel, what channel programs are in relatively small B2B SaaS companies. Granted, this year we did have a range from pre-revenue companies who tried to take the survey and didn't get very far, up to, we had numerous companies with hundreds of millions of dollars of revenue, so a pretty big spectrum. Our focus is just on the smaller market, but we attracted people to take the survey from all over the market. So diving right in, this is, Sunir gave me a very short amount of time, so this will be just a short, quick thing. It won't take a few minutes. There's only 4 slides, but I want to share some quick data from the survey with you guys. A couple things, because I only got 4 slides, I had to segment this a couple ways. So there's a couple things going on in this chart. First one is we grouped companies by revenue, by ARR. And then the second way we split things, because it's pretty interesting, and this will be a recurring theme in the slides, is that there's differences between vertical companies that sell a vertical product in a niche, versus horizontal, more of a platform company. And so we split things that way because we can see some pretty interesting things. So on average, out of the whole respondents, 53% said that they do receive some sort of revenue through a channel partnership. The data showed that a little more common with bigger companies this year, and particularly bigger companies that are horizontal. And we think that makes some sense, and I can talk about that in a minute. And then I think this bottom bullet here, it'll be very popular for this room, right, is we saw that companies that do have channel partnerships were growing 5% faster last year than companies that solely sell direct. So who do they partner with? Who do folks partner with? This question was just, select the partner that you typically work with. And pretty even spread. We didn't see, there's no real, nothing really a big takeaway here, other than, a little bit of everything. And the software, partnering with another software company or partnering with a consulting firm or integration partner is the most common. And then particularly we saw, and this makes some intuitive sense too, that horizontal companies partner more with integration and consulting companies, and vertical niche companies partner with other software vendors. And so we think that makes some sense, right? And something to keep in mind as well. And this goes back to, I'd be really curious, I think it was Bob maybe, and even some of you, and I'm sure there'll be tons of this throughout the day and tomorrow, but really, Bob was saying he's got this escrow database and can see where there's overlap. I'd be really curious if he sees any of these kind of trends too, or anything like that. And all of you guys who work in this space, curious how, to hear all your experiences. Okay, importantly, how much revenue does the channel create, right? Across the board, 21% of revenue. So for companies that said they do receive some revenue from the channel, 21% of revenue comes in through the channel. And interestingly, it's pretty flat. So another thing, we segmented this one by ACV to see if there was any differences in annual contract value or selling price, to see if there was any difference in the amount of revenue that people are bringing in through a channel partnership. And interestingly, no. last year, the lower end of the market saw a lot less revenue through the channel. They were at 10% last year. And this year, quite a bit more, right in line with the average at 22%. And then, again, importantly, horizontal companies see a much larger share of revenue come in through the channel, 6% more than their vertical peers. And that's across all ACVs. OK, last slide. Told you it was going to be quick. What's the selling structure for these partnerships is another question we asked. And so this is on a scale of 100% of revenue that comes in through the channel. How is it sold, right? And so the three options were introduction or a referral, joint selling between the two partners, or full-blown card-carrying reseller out there. And intuitively, I think the smaller ACVs, it's more of a referral or maybe even just a simple link, and then or a full-blown card-carrying reseller out there just selling it as is. And then for larger, probably more complex sales, longer sales cycles, a lot more scoping and things like that, you see a lot more joint selling. And that makes some sense. I think that's all on that one. OK, growth slide. But this is mostly, I think Sunir said he's going to send this out to you guys. So I just wanted to write up the takeaways so you have it in sort of PDF form. But the big takeaways are more than half the companies that took the survey said that they are engaged in a channel program of some kind. It's more common in larger companies, and it's more common with horizontal companies. Regardless of ACV, the average amount of revenue brought in through the channel for an individual software vendor is 21%. And they generate more revenue for horizontal companies, 6%. And then, like we said, companies that run a channel program are growing 5% faster than their vertical peers. And then lastly, we didn't talk about this today. We wanted to look at this. It's a question we get a lot. It's really interesting. Is retention impacted by channel sales versus direct sales at all? And so we quickly did again, we closed the survey last week, so it's been kind of running through the data as much as we could. And first pass, no difference in retention between channel companies and their direct-only peers. We use this survey data to do a lot of research throughout the year, and so this is an area that I want to dive into more because I think it's really fascinating, and either to fully prove it or just flesh it out a little bit more. And so I guess on that point, like I said, we do research throughout the year, so you're welcome to go to our website and sign up for those newsletters and pieces, or ping me for any questions or anything like that. And that's it. Told you it's going to be quick. I don't know if we have time for Q&A, no Q&A, whatever.
We have a couple of minutes for
whatever
Q&A.
you want to do. I'm happy to.
First, thank you so much, and we're going to send the full deck
Okay,
out as soon as, tomorrow or something.
Yeah. Okay.
Any questions? I do have a question. So in the VC world, channel is not really talked about that much right now. Is it changing? Is it still?
It's certainly. So we get our CEOs together twice a year, or a subset of them, whoever wants to come, for a roundtable, and it was a big topic this year. It might have been, we had a guest speaker from one of the founders of HubSpot, so it might have been why it was sort of more of a focus this year. But it was great conversation among everybody. They were all, like I said, thinking about it and beginning it, working on it. And so it's been, we're learning more about it too, but it seems to be more common. And you saw even early stage companies, less than $1 million of revenue, same percentage prevalence of a channel program. So they're starting early.
And so many CEOs are driven by the pressure from VCs. How, as partnership people, can we align our metrics like this to talk in that universe? Yeah, that's a good point. I think it depends on who the partner is and how SaaSy they are, right? But I think that's the SaaS metrics are an important, retention rate, ACV, AR, just sort of getting up to speed. And I don't know exactly the makeup of the room, but that's just how that world talks, and that's it. Top line ARR. That's how SaaS companies are valued. So that's a really important thing. Just that's the world that VCs, especially SaaS-focused VCs, and that the SaaS companies are focused on is repeatable, predictable revenue, right? And so talking and working that framework is key.
Quick question. You had a definition, or perhaps provide a definition for when you speak verticalized versus horizontal. Can you give a little bit more appreciation for how you drew that line? Is it industry verticalization, functional verticalization? How is that kind of defined?
Yeah, it's a good question. Trying to remember what the exact question is, but we ask a question to help them self-report that distinction. Trying to remember the exact question, but it's basically, do you sell a vertical product or a horizontal product, and select one or two, one of the two, so that it's self-reported. So it's a pretty simple, easy way to segment the data. But there probably is a gray area. It's.
Okay, one last question.
From a cost of acquisition standpoint, on the partnership side, I know kind of running sales, it's generally kind of $1 is like the kind of the magic number that we float around and try and get a little bit lower than. Is there kind of a goal in terms of a CAC for partnership channels?
So another topic we've been diving into on the survey as well, and we have it at the total company level, but we don't have it broken into the two areas. I would say, surprisingly, I think that's right. There's numbers like that, and then LTV to CAC and all these things, right, that are floating out there. The numbers we're seeing in the survey are far more, I want to say the right way, positive, I guess. So CAC is a lot lower, LTV to CAC is a lot higher than sort of all those best metrics that are out there in the blogosphere, right? And I don't, it's a mix. We've got lots of bootstrap companies, so it could be that they're just, more conservative and not pushing the envelope like a majorly VC-backed company might be or something. But generally speaking, across the entire survey, higher LTV to CACs and lower CACs don't have much I can comment on between partnerships, and so I think that's a great area to look into. Sorry.
All right, thank you so much,
Yeah,
Rob.
thank you.
Good.
Thanks, everyone. See you around.